Hey everyone, welcome back to Corporate Decoder, the place where we help you understand what's really going on behind the headlines of corporate America. And today we're diving into a filing from Century Therapeutics Inc., a company that seems to be playing a bit of a financial shell game when it comes to staying listed on the stock market. So imagine you're trying to stay on a major stock exchange, but your company's stock price just isn't quite cutting it. That's exactly the situation Century Therapeutics finds itself in, and this report tells us all about their efforts to avoid getting kicked off. First off, the basics. Century Therapeutics is incorporated in Delaware, is identified by the commission file number 001-40498 and has an IRS employer identification number of 84-2040-2009 Hive. These are just the official markers of the company, but don't tell us much about the story unfolding here. Their main thing is common stock traded under the symbol IPSC on the Nasdaq capital market. Now this is where things get interesting. Nasdaq has rules companies need to follow to stay listed, and one key rule is about the stock price. It can't dip too low for too long. On February 26, 2025, Century Therapeutics got some news from Nasdaq. They were told that for 30 days straight, the stock price had been below the required minimum of $1. This is a big deal because it means you're not meeting the standard to stay on a premium market like the Nasdaq Global Select Market. Nasdaq, being a bit of a guide, gave them 180 days to fix this problem. That's about 6 months, and the deadline was August 26, 2025. Think of it as a grace period to get that stock price back up over $1. But here's the kicker, they didn't make it. By August 26, 2025, the stock price was still too low. So what happens next? Instead of being immediately delisted, Nasdaq gave them another lifeline. They got an extra 180 days, this time until February 23, 2026 to turn things around. This extension wasn't just handed over though. Nasdaq looked at a few things. For starters, Century Therapeutics was still meeting other listing standards like the market value of their freely traded shares, so it wasn't a total disaster across the board. They also let Nasdaq know their plan. Their plan was to do a reverse stock split if needed. A reverse stock split is basically combining existing shares into fewer new shares. This artificially boosts the stock price per share. For example, if you have 10 shares at $0.5, it doesn't magically make the company more valuable, but it changes the number on the ticker. As part of this maneuver, and to give them a better chance to comply, Nasdaq also approved moving Century Therapeutics from the Nasdaq Global Select Market to the Nasdaq Capital Market. Has different requirements. The important thing is their stock IPSC still trades, and that's for a part Nasdaq, but the capital market has different requirements. The important thing is their stock IPSC still trades, so the clock is ticking again. If before February 2026 the stock price hits at least $1 for 10 days in a row, they'll be considered back on track. Century Therapeutics says they're watching the stock price closely and are ready to do whatever it takes. This includes that reverse stock split. They also acknowledge there's no guarantee they'll succeed in meeting the requirements. And finally, we see the official sign-off confirming this report is accurate. And let's talk about what this really means. Century Therapeutics is in a tough spot. They've been struggling to keep their stock price up. They've been struggling to keep their stock price up, which often signals that investors aren't feeling very confident about the company's future prospects or its growth potential. Nasdaq's rules about minimum stock prices are there to ensure that only stable, well-performing companies remain on their exchanges. The fact that they needed an extension and are considering a reverse stock split shows they're fighting to avoid delisting. A reverse stock split can be a double-edged sword. It can help meet listing requirements and might attract some institutional investors who avoid low-price stocks. However, it doesn't fix the underlying reasons why the stock price fell in the first place. If the company's actual business performance doesn't improve, the stock price will likely continue to struggle, even after a split. Looking at Century Therapeutics, it's a biotechnology company focused on developing treatments for cancer. This sector is known for being high risk, high reward. Companies often spend years and a lot of money on research and development with no guarantee of success. Investors are essentially betting on a future breakthrough. If the market isn't seeing that potential, or if the company is experiencing development setbacks, it's going to reflect in the stock price. The real concern here isn't just the stock price, it's what the stock price represents. It's a market sentiment. If investors are betting against Century Therapeutics, the company might have a harder time raising capital in the future, which is crucial for drug development. They need money for trials, manufacturing, and getting their therapies to patients. A key risk that they themselves mention is that there's no certainty they'll regain compliance. This means delisting is a real possibility. If they get delisted from Nasdaq, they might move to over-the-counter markets which are less liquid and generally seen as less desirable for investors. This could significantly reduce the accessibility and liquidity of their stock. Ultimately, while the company is taking action to meet Nasdaq's rules, the core issue is the market's perception of its long-term value and potential to succeed in the competitive biotech landscape. Investors should be asking themselves if the planned reverse stock split and the extended compliance period are enough to address the fundamental business challenges that led to the low stock price. Without a clear path to profitability or significant clinical period are enough to address the fundamental business challenges that led to the low stock price. Without a clear path to profitability or significant clinical period fixed. Alright, that's our breakdown of Century Therapeutics' latest filing. What's your take on these moves and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.